very special edition of our monthly pitch event. We're thrilled to be bringing you some of the most exciting emerging startups in the fintech space. I'm Tara Lukabaugh, Director of Strategic Initiatives at OneValley, and I'll be your host for today. None of this would be possible without you, our OneValley community. On behalf of the whole OneValley team, I'd like to thank you for joining us. We're thrilled to be partnering with Figure on today's event. Manage your equity on Figure's cap table management solution with industry best features, including a 409A valuation and 2-day onboarding at an exclusive 50% off discount to the OneValley community. And Figure is covering your first year of Passport for free, but more on that later. I'd like to take a moment to thank Figure President Asiff Hirji and his team for their partnership and for helping us make tonight possible. In just a few minutes, we'll be joined by Asiff for a fireside chat with our Chief Product Officer, Alec Wright, where they'll discuss Figure's pioneering use of the blockchain to reimagine traditional financial services and what we should expect from the technology over the coming years. Before we kick it off, I want to tell you a little bit about what we do here at OneValley. OneValley is a global entrepreneurship platform that supports entrepreneurs, accelerates startups, and empowers organizations across the globe that foster innovation communities. Over the past 6 years, OneValley has supported hundreds of startups that have raised over $1 billion. Our mission here at OneValley is simple: democratize the resources of Silicon Valley and share them with the global community. We do so through a variety of initiatives, including events like these. Pre-COVID, we were running 80 events a year in person in our various innovation spaces. But today, not only are we running these events virtually, but the online accessibility of them has opened up these opportunities to the world at large. You'll see that today in our diverse pitching startups from around the world. Now, I'd like to introduce you to Passport, our online innovation platform. As you can see, we have over 40,000 members on the Passport platform who access and interact with not only each other, but also dozens of corporate partners, hundreds of investors and mentors, and over $1 million in discounted or free technology tools and services. Use the code FinTech25 for 25% off of your premium Passport membership, or click the button at the bottom of your screen for access. If you're not yet a member, I encourage you to check us out and take advantage of this limited time discount. Again, just by clicking the banner at the bottom of your screen. Our community of entrepreneurs is growing by the day, so you won't want to miss out. Now, to kick off today's event, I'd like to welcome Alec Wright, Chief Product Officer here at OneValley, to begin our fireside chat. Over to you, Alec.
Tara, thank you so much. It's an absolute pleasure to be with everyone here tonight and to get to have this conversation. Tonight, I'm joined by Asiff Hirji, the president of Figure Technologies. Prior to Figure, Asiff was the president and COO of Coinbase, where he grew the company to over $1 billion in revenue. And even prior to that, his experience includes serving as an operating partner at Andreessen Horowitz, as well as the president and COO of TD Ameritrade. So just an incredible background in the current and the today and future of financial services. So it's a real pleasure to have you here today, Asiff.
Thank you for inviting me. Delighted to be here.
Well, wonderful. But before we get too deep into the conversation, I'd love to give you the opportunity to share a little bit more about yourself, as well as Figure's vision of using the blockchain to reimagine kind of the full spectrum of financial services.
Sure. So look, I'm a software engineer by background. So I started my life as a software engineer at Watson Labs, and I spent most of my time, dealing with financial institutions because they were the biggest users of technology. Right. And I quickly discovered I liked the application of technology more than I liked the creation of technology. So, went to business school, discovered this thing called consulting I hadn't heard of, and then kind of went from there. But I would tell you, over 25 years as an operator and an entrepreneur and a founder within fintech, we've been lucky. We've lived through, I would say, the first two phases of the internet. We're now on the cusp of Internet 3, and I found Internet 3 the most exciting because I think it's going to upend financial services the most. So let me pause there and sort of unpack that a bit. Internet 1 was basically mainframe to distributed, and it brought along the era of great innovation and a lot of self-service, but fundamentally didn't really re-engineer how we did financial transactions. It just kind of automated out some things and pushed it onto the consumer and said, you do it self-service. Then Internet 2 comes along, and instead of being on the web, we're now on the mobile browser again. So we made financial services kind of location free. right? Internet 3 is fundamentally different. Internet 3 is based on things like blockchain, and it decentralizes the data. And what that means is it puts the power back in the hands of the user, and it allows for things like bilateral real-time settlement, which is just a fancy way of saying two people can transact with each other without the need for intermediaries. And the industry that's the most rife with intermediaries is financial services. And so I think it's the one that's going to be the most affected. And I will tell you that when I was at Coinbase, one of my biggest frustrations was that most of the projects that came along, they were basically token speculation in disguise. They weren't really real world use cases that mattered to the average person, right? So until crypto has its breakthrough use case that, other than just say Bitcoin, which is an inflation hedge, I think we will have missed it, right? Until it becomes something that people can't live without, we will have missed it. And to me, the biggest feature we can get there with is financial transactions. And so I'm excited to be helping Figure. Figure is focused on real world transactions like, lending to buy a house, or borrowing money to pay back your student loan, or managing the cap table of your startup, or running a primary or a secondary raise for your startup, et cetera. Real world use cases on blockchain, proving they can be done better, they can be done with less capital, they can be done with less cost, and hoping that therefore by proving that the world starts to adopt that as a way forward. And I would say that thankfully we've been quite fortunate that there has been great adoption and traction. So that's why I'm delighted to be here today on your FinTech Day.
Well, no, it's really delightful to kind of hear that perspective, and as well as get the context of the evolution of that intersection of increasing and evolving computing systems and financial services, and we'll chat in a couple minutes on this inflection point we seem to be at around adoption of some of these technologies. But I really want to double click into some of the examples you were just giving around where Figure's focus. So mortgages, personal student lending. What's the component pieces or dynamics of these financial products that make them so appropriate for Figure and blockchain technologies?
Sure. So let's start with the fact that in the United States, the vast majority of home lending is not done by banks, right? It's done by every other country. It's the banks that do the home lending. In the United States, it's not. It's non-bank financial institutions, right? And the non-bank financial institutions like Quicken Loans or others, they lend, they create mortgages, and then what they do is they sell them. They securitize and sell them to the capital markets as investment products. And so, if Figure had started and done things the normal way, like everybody else, we would have generated, say, $100 million worth of loans. We would have turned around and said, hey, I've got these loans for sale. They have a credit score between here and here. They have a geographic distribution like this, and they have a loan to value between here and here. What do people bid on this pool? And we would get a bunch of bids. And then we would pick a winning bid. And then what would happen is the buyer would put the money for the payment in escrow. We would put all the loans in escrow. The buyer would then hire an auditor. The auditor would go look at our loan tapes and make sure that they conform to what we said. And then that whole process takes about 90 days before that transaction finally settles. And so that's a super capital consumptive, super time wasting, very expensive process end to end. And that expense is borne ultimately by the consumer in the rates that are charged, right? Now, when you do it on blockchain, you can upend that thing entirely. So the way we designed our system, we've taken that 90-day paper-based, very intensive, capital-intensive process, and it is basically a capital negative, i.e. I get capital in advance, 3-day. Why 3 and not real time? It's because the borrower has 2 days to change their mind. So it's actually same day, but 3 days because the borrower has 2 days to change their mind process. And the way it works is as follows. When we originate a loan, okay, like everybody else, we get a home valuation. That home valuation is published to the blockchain by the entity providing the home valuation. When we get a FICO score, that FICO score is put to the blockchain by the FICO provider. When we get when we actually underwrite the loan, the loan documents and so on go to the blockchain. And therefore, we don't have to attest to anything because we substitute trust for truth. You don't have to trust us about the loans. You can look it up yourself. And so if you're a loan buyer, you can come to our marketplace and you can say, hey, I'm only interested in loans in California, less than 80% loan to value and over 680 FICO. Only the loans we have that match that show up, and you can then bid on them against other buyers in a real-time marketplace, and you can buy them. And that's exactly how we do it. And by doing that, we have saved over 120 basis points of cost on that entire system. Now, 120 basis points on the one hand may not seem like a lot, but that more than doubles the average profitability of a HELOC, first of all. And secondly, the home equity market, if you think about it, is measured in the trillions of dollars. So if you think about the value that's being unlocked there, it's bigger than the market cap of almost every company except maybe 5, right? And so that's a very big deal of how blockchain, and just one little example of how blockchain is helping save, the average consumer thousands of dollars on what is otherwise a pretty standard product, which is financing for their home.
And so from the consumer perspective, it's the same process. It's many of the same stakeholders, other than it's fast and it's easy. But the magic is then just how you're enabling the interaction between those stakeholders. It's a super exciting example of where the opportunity exists on the consumer side.
Correct. So let me back up with a statement that says blockchain is simply a way to build an application. Right? If you think of blockchain or crypto as an asset class, or it's a bunch of securities, or it's speculative, you kind of misunderstood what it is. It is just a way to build an application. And the fundamental difference is it builds an application in a decentralized way, so there's no central body controlling the data. And that's awesome for products where there's many, many participants in the transaction, and where settlement costs are high, or liquidity requirements are high, because it takes all that complexity away. So you could apply that same logic, and we have, to things like trading of equities, to things like raising capital for startups, to things like managing a cap table, et cetera. Those are all things that are improved by using blockchain, and we have proven that that's true.
And it's a perfect segue into my next question, which is, we just got a little insight on the consumer side and some of those financial products that Figure's focused on, but there's clearly been a major shift on the B2B and institutional side. What's guiding your prioritization and strategy as you look at kind of some of these B2B opportunities?
Yeah, no, great question. So look, we looked at where are the biggest areas of value creation in financial services by simplification through blockchain, right? So we talked about how convoluted lending is, and how much you can simplify it down and make it much more real time, right? And I showed you exactly how that happened with the HELOC, and we've done that with mortgages and so on now too. Another area that's a huge pain point is trading secondaries of private securities. So the public markets are relatively efficient. Yes, we can make them much more efficient through blockchain, and the GameStop thing could never have happened if it was on blockchain, but we'll get to that later. But if as a founder multiple times over, and as a GP in both venture funds and private equity funds, I know exactly how much pain there is in trying to provide liquidity for my investors when they want it, right? Because it's an illiquid security. And so what we have done is we have built, effectively, think of it like Carta, where it's a cap table management system, but it's attached to a real exchange, a real-time bilateral settlement blockchain-based exchange. And so we now have literally hundreds of startups that create their cap table on our cap table management system that then run their primary capital raise on that marketplace, which simplifies the process of gathering the funds and filling out the cap table the right way. And then if they ever want to do secondary liquidity, they can say, hey, for the next 3 days, we're going to allow trading of our securities, only these share classes or whatever, and that happens. And so we've had now primaries on that system. We've had secondaries done on that system. Tens of millions of dollars on a monthly basis being done on that system. And I will tell you from painful experience, every time we have done in the past life a primary or a secondary, we spent days reconciling the cap table, because no matter where we were, whether it was a spreadsheet or Carta or something else, it was always wrong. And you would spend days fixing it. Here, when it's on blockchain, you can't prevent the fat fingering, but because it's an immutable database, you know exactly when the fat fingering happened and how it happened, and you can fix it. So you can find the errors much faster and fix them much faster. And this is why the startups that are using our systems are so much happier, because the admin costs are lower, the amount of effort that they're putting in is less, and they're able to much more quickly raise capital and manage that capital.
And that's certainly a hyper relevant topic for the audience at hand and our broader OneValley community, where we're particularly focused on kind of early stage companies at their formative, elements and formative time of development. And so, speaking to that community, when they're looking at all these different tools that are out there for cap table management, and a bunch of them still may be looking at Excel, what's your pitch to those founders as to why the blockchain's the right tool, and then why Figure's the right platform to go with?
Yeah, and it's a good question. And sorry, I didn't mean to turn this into a pitch for our products, right? I'm not trying to do that. I'm trying to make this more general, where if you're a startup in fintech, you better have a thesis as to why you're not building on blockchain, because the default, it's no. 3 years ago, the default would have been, I'm doing it the old-fashioned way, and I sort of kind of will think about blockchain when it shows up. Now, the default should be, I'm building it on blockchain, unless I can prove to myself that a centralized solution is actually better. So whether it's payments, whether it's banking, whether it's credit, or whether it's trading, you name the use case, and I will argue it will be better on blockchain. And so let's just take payments for an example, and I will come back to your question with the cap table in a minute, right? Like the average merchant today spends between 200 and 300 basis points on every transaction that's done by a credit card because of the Visa MasterCard rails, right? You can, which is a ripoff. You can and should be using a blockchain rail, say with QR codes, which would then create that same transaction at no more cost than it would, say, sending an email, right? And so the merchant, think of the poor merchant who's paying all that money. That money would come back to the merchant, right? And so we've now helped build a series of payment products on blockchain. We've helped build, so we there's a version of Chime on blockchain, there's a version of Venmo on blockchain, there's a version of Affirm on blockchain, all these things leveraging the blockchains that we're using to create that product set. But back to, so if you're a fintech founder, I would challenge you, figure out why you're not, if you're not building on blockchain, figure out why not, because the answer is probably you missed something. But back to your question, if I'm the average founder, a spreadsheet's probably just fine in the early days, right? Let's not kid ourselves. A spreadsheet's just fine. But the minute you start to raise, the pre-A round or the bigger seed rounds, et cetera, you're now spending a lot more effort managing the cap table, managing the LPs, making sure you're accounting for it properly, making sure you figured out the right share classes, et cetera. And if you ever, heaven forbid, need to provide some liquidity, that's really, really hard if you're doing something like, on Excel. And so those are the kinds of founders that come to us and say, I've looked at some of the other things, they're not helping, right? And our system will do two things. One is it takes a lot of the effort of managing your cap table away, right? Because it's done in an immutable fashion on blockchain. And two, because your equity is now represented as a token, it's super simple to have that traded on the exchange that's bolted onto our cap table management system whenever you want it to. We're not saying you're going to trade it 24/7. That doesn't make any sense for private companies. But you might say, hey, you know what? Once a quarter, for 1 day a quarter, I'm going to let my employees trade out at the 409A price or above, and I'll turn it on to whoever wants to invest, if you're an accredited investor, et cetera, and off it goes, right? And we have companies doing exactly that. That's a much better way, a much cleaner way of managing your cap table and allowing liquidity.
Out of curiosity, where does that liquidity come from? What is the profile of the investors that you're seeing on the other side of the Figure marketplace?
So we have a series of different types of investors. So typically a startup will come and will say, I'm doing a round and I have most of the round spoken for. I have the investors, right? But I need someone to help me accredit them. I need somebody to actually make sure that they fill out the forms and subscribe properly and all this stuff. So we've built and automated all of that, right? So you as a founder would say to your potential investors, hey, I'm raising a round. If you're interested, here's a link. Follow this link and it'll set you up, okay? And so that link will take them to Figure's marketplace. They will KYC AML, so they have to produce ID. They have to prove they're an accredited investor. We do the work to make sure that is the case, right? And once they're accredited enough, then they can subscribe to your investment, and they can put in the amount, and we manage the funds flow and everything else, and make all that pain go away. So in that way, we have built up a lot of these investors in our marketplace who have done this. And so, if you, a founder, choose, it's your choice to expose your capital raise to investors on our platform who are there already, you can choose to do that. You could equally choose not to do that and say, no, I only want it open to the people I'm inviting in. That's up to you. And then the other thing that we've done is if you're managing cap tables for private companies and the fundraise for private companies, it's not that hard to manage the cap tables for a fund and the fundraising for a fund. And so now we have VC funds who are doing this. And in fact, we have one of the world's largest private equity fund complexes called Apollo, which is now going to put its private equity funds on the same system and tokenize the interest in those funds and let the LPs trade those interests in a secondary market, right? And so those are the kinds of things that we're seeing happening on that system.
Very, very exciting. It seems like probably endless opportunities for liquidity as we start thinking of these asset classes that have been pretty locked away for a while.
Totally. I think the demarcation between a public asset and a private asset is getting fuzzier and fuzzier, right? And companies are staying private for longer. Most of the value creation is actually being done today in its private phase, not its public phase. The rounds are much, much bigger. And so in that case, it's got all the complexities of a public type offering, but in a private setting. And so that's why you need, I would argue, these institutional grade solutions on blockchain that allow you to do that. And you, the founder, can decide when to quote, go public or not. And the irony is when you go public, if you went public on today's markets, you'd go from a real-time settlement, bilateral, risk-free environment to a T+3 GameStop-like environment. And I'm not sure that's really going to happen in the future. I think the equities market's going to have to come down to real-time settlement as well.
Now, very, very interesting perspective, especially on the state of the public markets. I want to ask one final question that, maybe if we step back, one level, you were mentioning it in your kind of initial introduction, which is that, during the first wave of blockchain technology development, we saw a lot of really exciting, technology development, but that was struggling for commercial adoption, struggling for that killer use case. Whereas, I feel like today it feels like we're at an inflection point where that adoption is really starting to develop, and maybe financial services is the first industry to really go. But what do you think? Do you think we're in the first inning of this adoption, and what do you think the world looks like 5 years from now?
We're definitely in the first inning of adoption, right? So the financial services is one of the first is one of the first industries to typically adopt new technology, just given how consumptive it is of all technology, right? I would tell you that store of value as an inflation hedge or just in general, that's a proven use case, right? Bitcoin has proven that works. It's been working for well over a decade. Like, that's proven. I would say that a platform to build other crypto applications on is also a proven use case, like the Ethereums, now perhaps the Solanas of this world, et cetera, but that's been proven. I think beyond that, we still haven't proven out a lot of use cases for the average consumer. So we are trying to do our best to make things like, borrowing to buy a house, or borrowing to paying off your student loan, as I talked about before, real world use cases. We're trying to make banking, buy now, pay later, et cetera, all those things on blockchain. That is happening. And I say over the next 5 years, that's going to become ubiquitous. And I think the other things that are going to happen over that next 5 years is you will see blockchain adoption in other areas too. Like, wherever there are a lot of intermediaries and wherever there's a lot of liquidity being tied up and a lot of capital being tied up, I think you will see blockchain break through that and bust up that logjam. So things like manufacturing and logistics, supply chain, things like healthcare, actually, and the healthcare records and the privacy around healthcare records, I think is going to get affected. So it's not just financial services, but I think financial services is the one that's going to get affected the most in the shortest period of time.
Before we know it, we're going to be on a daily basis doing transactions that are working their way onto the blockchain. And, it's going to be as common as, any, if not more common than any other transaction medium we have today, which is, I think, an exciting vision for a lot of different industries. Yeah,
I think so. And the breakthrough will be when someone other than China puts out a central bank digital currency, and its citizens actually start having digital wallets for a lot of the work that they do on a daily basis.
Well, I feel like every day the history of cryptocurrency, blockchain is being written, and if you turn off for one day, you've kind of missed it. So it's such an exciting and dynamic space, and just cannot thank you for spending some time with us today, sharing both your your kind of historical perspective on where we've been, but also this really exciting vision for where we're going, and Figure's role in all of that. Thank you again.
No, it's my genuine pleasure. And if I may, just 1 minute, to all the founders who are out there, being a founder is the single hardest thing you will ever do, right? Having done it myself, it's the single hardest thing you will ever do. And just don't give up. Startups fail when the founder gives up. Don't give up. Like if you've got that dream and you really want to push for it, keep pushing for it. You know, you may pivot 3 or 4 times. It may not be exactly what you thought about, but it'll happen. As long as you have faith and as long as you don't give up. So I wish you all the best. It's the hardest thing you'll ever do, but also the most rewarding thing you do. And I'm genuinely looking forward to seeing all the innovation that's going to come out of this cohort. So thank you for having me here.
Thank you. With that, our fireside chat is done. I'd love to turn it back over to Tara Lukaba, our MC, and another special thanks to Asiff, as well as the entire Figure team for their support tonight.
Thank you so much to both Alec and Asiff for that really insightful conversation. Asiff, I have goosebumps from your last comment. You certainly set the stage for all of our upcoming presentations. And I'm sure our judges will have some questions for any of our upcoming presenting founders that aren't yet using blockchain. For our audience, you can book a Figure demo at the link at the bottom of the screen. As a reminder, you can manage your equity on Figure's cap table management solution with industry best features, including a 409A valuation and a 2-day onboarding at an exclusive 50% discount to the OneValley community. And they'll also cover your first year of Passport for free. Figure Equity Solutions offers a full stack lifecycle equity management built for startups and private companies. They make it easier for private companies to raise capital, manage and trade their equity all on a single platform. So once again, thank you to the entire team at Figure. Special thanks to Asiff for joining us today. And for the audience, don't forget to book a Figure demo at the link at the bottom of the page. So without further ado, I would like to introduce our judges. So today we are joined by Sophie Liao, Managing Partner at Oyster Ventures, John Martin, Director at Extreme Tech Challenge, and our very own Juan Scarlett, Managing Director of OneValley Ventures. So I want to thank you all for being here today and give you a quick moment to introduce yourselves and tell us what excites you the most about the future of innovation in fintech and the opportunities that those innovations will produce. So maybe we will start with Sophie.
Oops, sorry. Can you hear me?
Yep, we can hear you.
Great. Hey, this is Sophie. This is my 5th time or 6th time with OneValley. You guys always put up such an awesome event, and I'm just still a little processing the previous fireside chat because I aligned with every single word he said. So how do I even possibly top that? So I started Oyster Venture about 5 years ago, and then with the notion of I want to invest in the next best fintech startups. So now I'm at Fund 3 with a partner of 3, and our thesis is investing anything that is unlock liquidity and efficiency to integrate the market. Fintech to be the first one, just like blockchain. We touched base earlier. That's fintech, financial banking system, private investment system. Industry will be the first to be revolutionized, and the rest of the industry will follow. So now, what do we seek out in in Oyster Ventures in terms of fintech is 3 major categories. One is democratizing private investment space, like say I invest in AngelList, Republic, crowdfunding for unaccredited investors. Second is any tool sets or platforms that bring liquidity and efficiency to illiquid assets like pre-IPO secondary trading platforms, Carta-X, Forge Global. And then last but not least is the new banking system or experiences serving for the next generation, like Gen Z or digital creators. So if you fit into one of the 3 categories or building a fintech startups in completely outside of the box, enlighten me. Thank you.
Awesome. Thank you so much, Sophie. John, would you care to go next? Oh, you're on mute. Sorry.
Sorry about that. Yes, I work for Extreme Tech Challenge, which is yet another competition. It's a global competition that is focused on tech for sort of a higher purpose that's also a great investment, but leveraging off of the UN Sustainable Development Goals. Fintech is one of our categories, and we've had a number of great companies in the fintech category doing things like using not so far blockchain, but just using cloud computing to provide credit for people that have sort of fall through the cracks of the regular banking system. Some of them are using blockchain, as Asiff talked about, to provide insurance for farmers, or total banking services for migrant workers who, again, sort of fall through the standard banking system. So this is an area of great interest to us. I'm very excited to see these companies. And if you get through this, I hope some of you will consider, we're just starting our Extreme Tech Challenge cycle for 2022 that culminates in June. So maybe some of you would like to join into that as well.
Awesome. Thank you so much, John. Juan, would you close us out?
Sure. Thanks, Tara. I'm Juan Scarlett. I lead OneValley Ventures, where we work with partners to develop and execute venture investment strategies, leveraging the OneValley ecosystem. We recently launched the OneValley Ventures Fund, a pre-seed and seed stage fund focused on investing in standout digital transformation companies from across the OneValley ecosystem and our partner networks, and we are actively investing. I've been in the venture capital industry for the past 14 plus years, and broadly working in technology investing, research, and operations for the past 20. And in terms of what excites me about the future of innovation in fintech, a lot of it is exactly what Asiff talked about earlier. But I'd say, sort of broadly, sort of the increasing access to financial services for everyone, regardless of region or economic status, is pretty exciting. The sort of unbundling of traditional legacy banks and intermediaries continues to be a major driver of growth in fintech. I think there's certainly still a lot of work to do, but the advancements we've seen in the last decade in core technologies like mobile and cloud computing, AI, machine learning, blockchain, of course, and others are all major factors in enabling governments and corporations to provide more financial services to everyone. And that generally is a very good thing. So I'm very excited about that.
Certainly. Thanks so much, Juan. Thank you again to all of our judges for joining us today. You have a very difficult task ahead of you. You'll be tasked with judging all 8 of our amazing founders on their upcoming pitches. As I mentioned earlier, some of our founders are joining us from around the world in various time zones, generously sharing their very late nights or very early mornings. So please join me in thanking them for doing so. And without further ado, I'd like to introduce each of our pitching founders. First, we have Evan, founder and CEO of Kiddie Kredit. Then we'll have Mayank, COO, CTO, and founder of IntelliBonds. Chandu, co-founder and CEO of EnrichVideo. Angelica, CEO and founder of Lendonomy. Javier, CEO and co-founder of Wipei. Yael, CEO and co-founder of SolidBlock. Stefania, founder and CEO of Physis Investment. And finally, Patrick, CEO and founder of Benefi. A very quick reminder about what is at stake tonight. Our grand prize winner will be walking away with $2,000 in cash. The audience choice will walk away with $500 in cash. And as mentioned, each of our founders, each of our winners will also be given a free annual membership to Passport. So let's quickly go over all of the ways that you as the audience can take part in the action. First, I encourage you to ask questions to our pitching startups in the chat. If we have enough time after the judges Q&A, we may get to some audience questions. Next, please rate each startup after their pitch. Your votes will determine the Audience Choice Award and who will walk away with that $500 cash prize. And by rating, you yourself will be entered into a raffle for the chance to win 1 free year of Passport for yourself. And finally, if you'd like to connect with any of our pitching startups, please ask for an intro at the top of the page. Click on the Meet the Startups tab and select the startup that you'd like to chat with. So without further ado, let's jump into our presentations. Please join me in welcoming our first presenter, Evan, founder and CEO of Kiddie Kredit, to our virtual stage.
Good evening. Everybody hear me okay? So now before I get, perfect. Now, before I get started today, I want to take you all back in the time. Think back to when you got your first credit card. Now, think back to some of the first purchases you made. Now, think back to when you saw your credit score for the first time. If you're like me, you have no idea how that even came to be. Hello, my name's Evan, founder and CEO of Kiddie Kredit. So what is the wealth gap? Well, I must say it's incredibly alarming. The average net worth of a white family is almost 10 times greater than that of a Black family. And that stat's usually just shown to grab headlines, but we need to take a deeper look at the issue. What's the biggest driver of net worth and household wealth anyway? It's home ownership. And what's the biggest barrier for home buyers? It's credit. Black home buyers are 3 times more likely to have a score below 660, which makes obtaining a mortgage that much more challenging. So this got us to thinking. We wanted to make a solution that focuses specifically on teaching about credit before it becomes an issue. Credit, when leveraged properly, can be a tool to generate wealth. So the thinking here is that if we can improve credit scores, then we can improve numbers on access to wealth building products across all income levels. So the cute idea, but how do you do it? Well, the way our current product works is simple. The admin assigns chores or activities for a child to complete. After completing them weekly, they'll be issued a credit score, which is based off of performance, which will determine how many rewards they get, which can be used to redeem items monetary or non-monetary, depending on the parent. And what is this credit score, you ask? It's simple. We created an algorithm that parallels traditional FICO models. So think of a missed chore like a missed payment, the longer you've had a chore like the longer you've had a credit card. And anytime a child says, hey, mom, can I get this? Hey, dad, can I get this? It's like an inquiry. As for myself, professional mentor to youth, co-founder of the Black Men Talk Tech Conference, and as a serial entrepreneur, I believe entrepreneurship is the key to economic equality. Mike Gross has taught financial literacy and entrepreneurship to inner city youth for over 15 years, and our CTO, Vic, previously a lead engineer at AWS with a master's of science in finance. So not only does he code at a high level, but he codes with a financial brain. And I'm limited in time, so I won't go through the remaining team members, but I assure you they're equally as impressive. Since the launch of our public beta, we've had over 60,000 chores completed in the app and are approaching over 6,000 families. We've been featured in outlets like CNBC, Bankrate, Now This, and we're called the financial literacy app teaching kids about credit by Forbes. So what separates us? Well, partnering with Equifax has been huge for us. It's validated us as a thought leader in effectively teaching credit to youth. Our upcoming development includes a product recommendation engine. So think of Credit Karma for families where we can recommend different products to families. And we've also developed over 100 hours of educational content catered towards preteens. So as far as partnerships go, I already mentioned Equifax. They're not only a partner of ours, but a client as well. And we've also launched a pilot with YMCA and are actively seeking additional partnerships that will expand our audience. So I know what you're thinking, yeah, that's cool and all, but how will you make money? Our business model is B2B2C as we work with organizations and municipalities looking for unique ways to engage with their audience. Now, why would a business pay for this? So let's take YMCA, for example. They have challenges around parent engagement. So the parent who's more involved tends to stay in the program longer. And we can help encourage that by giving them the ability to add tasks to the family unit that drive engagement. So this is just one example, but we're targeting different verticals as well with our initial pilot. So the prize money from this competition would help us do our part to empower credit healthy families that can trim down the wealth gap in this country. I thank you all for your time. Again, my name's Evan Leapart, and this is Kiddie Kredit.
Thanks so much, Evan. It was a great presentation and a wonderful product and mission. So let's head over to our judges. Juan, would you like to kick us off?
Sure. Thanks for the pitch, Evan. That's very interesting. I'm curious. Well, I should mention that I have a teenage son, and we actually do use a product like this, more focused on money, education about money, green light, basically. So curious actually about how you see the pathway from teaching kids about money early on in their sort of preteen and teen lives to then teaching them about credit. Because I kind of feel like money comes first, and then we start talking more about credit and access to it and how you could use it. How do you think about that pathway from teaching about money first, then credit, or do you do both in your app?
Yeah, a good question. So the way that we tackle the conversation of money is we're really attacking it through the lens of credit, right? So, and Greenlight, we actually don't look at them as a competitor. We look at with the product recommendation engine that we're building out. Like if a parent says, saving is important, investing is important, they have Greenlight Max, then we can essentially work with programs like that and be a way for them to lower their customer acquisition costs, and also bring them a savvy preteen that's about to be 13, or, you know, and that's not just green light, that can also work with banking relationships that start 13 and up. But one thing that we're building too is, and I showed in one of our earlier screens, is we're focused on building like a learning content center, right? So concepts of credit, to your point, you have to learn more about not just credit, it's money itself, right? So the foundation here is saying like, look, you go through these learning loops, think like a Duolingo, like learning lesson where you're learning about savings, intro to credit, interest rates. And then at the end of that learning journey, you get bamboo bucks, which bring you one step closer to your goal. So like at the heart of what we're doing and how we teach about credit is how this score is calculated, right? So the algorithm is just like a FICO score. So you're understanding like all the tasks that were assigned to you. If you're doing them on time, it's like making your payments on time. You know, if you're able to take on more tasks, that's like a healthy credit mix, right? So like just the calculation engine, but behind everything that we're doing is meant to parallel an environment about credit. But the learning loops that we're creating doesn't just marry us to the topic of credit. We can take that to a bunch of different topics and then work with different providers that want to be domain experts in that particular area.
Great, thank you.
Mm-hmm.
Thanks, Juan. John, would you like to jump in with a few questions for Evan?
Yes, and let's see, am I on? Yes, I unlike Juan, I don't have children, and my imagining of them is that they often, generally they resist chores anyway, and would at some point very shortly say, oh, this is just lame and I don't like what you're trying to do anyway. And I'm curious, I'm sure you've thought through how to sort of psych out the childhood persona and get them and keep them interested in this. What are some of the tricks for reaching children?
Yeah, so the hook for us, it's not in the chores itself. It's also even too, we always say it can be a chore to get parents to track chores, right? So
well, yes, indeed.
So we're focused
or
on the
credit.
components. Hence the reason for this in the first place, right? The vitamin versus the pain pill is what we're doing. But we see this basically being the rewards is the hook, right? So all of our product improvements right now are making the rewards engaging. So it's not just about money, right? Only 40% of parents pay allowance. So we wanted to expand our market share by working for the 60% that also, you know, can do it through just activities or products. So if that's the hook for the kids, to where they say, look, I want to get access to this now. How can I get access to my bamboo bucks quicker? That's where the educational content comes into play. And then they're saying, all right, look, I'll learn this just because I want to get a PS5 quicker, right? That's a large example, but something smaller, but that's the hook there. And then as far as chores, the word has a negative connotation to it, but it could be any particular activity that you want them to do, right? If they're a fan of playing basketball, like you could make it a task. Hey, go outside, shoot 50 jump shots. Right? Like whatever you want them to be, we're not trying to just marry it to the simple things that we know of, like instinctively, like make bed, clean room, parent has total freedom. And then the organizations that are, you know, working with these families too, like the Y, they can create whatever things they want as well.
Okay.
Thanks, John. I think we have time for one more quick question. Sophie, do you have any questions for Evan?
Quick one. What's your end goal with each new young customers has bright future?
Yep. So we target Kiddie Kredit for the preteen space, right? And we've done this on purpose, right? Like for us, it's our space around customer discovery. Just like to your point to previously, was like you build something out for teens and it sucks. they'll never forgive you, right? So we've really been able to understand our audience before we tackle the teen and up space too. And we've given ourselves the ability to go into a way of a feeder program, or tackling it ourselves from teens all the way up to young adulthood. And then the long thought process there, to answer your question, is we see ourselves as a credit education ecosystem where we can ultimately be a method of de-risking for credit issuance based off of what somebody's learned, not what they've earned. We just feel it's a way, like I said, to our initial point of, you know, creating fairer access to wealth building products. Knowledge is one of those ways that we could do it.
Awesome. Thank you to our judges, and thank you, Evan, very much for joining us today.
Appreciate it.
All right. Next up, we have Mayank Agrawal, COO, CTO, and founder of IntelliBonds. Please join me in welcoming him to our virtual stage.
Hello, everybody. My name is Mayank, and I'm co-founder of IntelliBonds. I'm from the investment banking background, and before starting IntelliBonds, I have been working across multiple sell-side firms, including Citibank, Barclays, Bloomberg, etc. And let me give you a bit of introduction about IntelliBonds first. We are a London-based fintech startup focused towards fixed income institutional investors. We have developed an end-to-end SaaS platform which uses artificial intelligence to automate credit analysis, provide sophisticated portfolio optimization, and strategy construction. Our platform helps our clients generate superior investment returns while reducing operational cost. Now, let me give you an example of the problem we are trying to solve at IntelliBonds. So compared to the other asset classes, such as equities, commodities, and FX, fixed income market has been lagging behind by many years when it comes to the technical adaptation. Excel sheets, Bloomberg, these are one of the most advanced tools used by institutional investors when they are managing portfolios of multi-billion dollars portfolios. Even when you look into the biggest asset management firms across the industry, portfolio managers download the data from Bloomberg, Capital IQ, and other tools into the Excel sheets and analyze them using the ad hoc models. This leads to inefficiencies and suboptimal investment returns across the industry. Now, how do we solve this problem? To solve this, what we have done is that we have created an end-to-end SaaS platform, which is divided into 3 separate modules. First one starts with the Credit Assist, which is the core of our platform. And as the name suggests, it focuses on automated credit analysis. For this module, we have developed numerous AI models in partnerships with the multiple UK universities. Some of the key features of these modules are trade signal generation, where we monitor the entire bond market and score bonds based on their expected returns over a couple of months. Second key feature for this module is the credit rating prediction, where we predict the potential credit risk changes for the different issuers and alerts our clients proactively. The second module in our portfolio is the Portfolio Assist, which uses the trade signals and other data generated by the Credit Assist and constructs a portfolio according to users' investment mandate. It also provides ESG-based portfolio construction and performance backtest. Our third module is the Trader Assist, which is under development and will provide the trade execution functionality later in the year. Now, let me give you information about the market opportunity. Our primary clients are asset management companies, insurance companies, pension funds. We are also working with the family offices and hedge funds. Based on our earlier estimates, the total addressable market is about $13.8 billion, and majority of this is still untapped. Now, we launched our product start of this year officially, and since then we have seen a tremendous progress, tremendous demand for our solution. We are running multiple trials with multiple organizations, and some of these trials are in the advanced stage of contract discussions, and we are expecting to convert them into recurring revenue in coming months. Now, let me give you a bit of introduction about the team. So Igor and myself, we are the co-founder of IntelliBonds. Both of us has been in the finance industry for more than 15 years. Along with us, we have the Sanjeev Misra, who is running our Indian Development Center, and Juliet Carter, who is head of our marketing department. In total, we have 19 employees, consisting full-time and part-time employees. We also have a very strong advisory team and the board members, consisting experienced professionals from the industry who has been helping us in defining our value proposition and go-to-market strategy. So if you like what you have seen, and if you want to know more about us or about IntelliBonds, please feel free to reach out to me at mayank@intellibonds.com. Thank you.
Thank you so much, Mayank, and congratulations on the progress thus far. let's head over to the judges. Sophie, would you like to kick us off?
What's your primary data source?
So we are partnered with the Moody's, IHS Market, Refinitiv, and S&P. So these are our primary data sources. We have the data partnership with them.
You have any moat built around it? What if another company coming in, having even more complete data sets?
So the main thing is that these are all proprietary data set. And so for an example, when it comes to companies' fundamentals, there are primarily 3 agencies, Moody's, S&P, and Fitch. We do have partnership with the 2 main providers. So we have one of the bestest data sources out there, and there's no third agency, no fourth agencies. So you cannot go any better than that. So we are already using, and we have the full 20-year history of these data sets to create our AI model.
Thanks, Sophie. John, would you like to jump in with a question as well?
Yes, could you just review for me again your business model, both how you make money and sort of why people are willing to let you make that money?
So yes, this fixed income market is not as fancy as equities or FX market, and many times it's a more kind of boring market. But it is $110 trillion market as of now, and growing as we talk. We charge on a subscription basis. It's a SaaS model, per user per year subscription, $25K per product. This is what we charge to the users. And we do have the data license fee. If people, hedge funds, when they want to use our AI outcome into their investment strategies directly, we provide the data feed as well. And the reason we are able to have our cake and eat it, the main reason is because it's so high barrier to entry. First thing is that you have to be from the fixed income market, and each and every data set, as Sophie was asking, is proprietary. For equities, you can go and download the data from Google, Yahoo Finance, and so on. Nothing like that works in the fixed income market.
So it's basically, in a sense, a sort of Bloomberg model, which is you have quality data and people are willing to subscribe to it.
Yes, it's very similar in terms of the pricing. It's a Bloomberg or yes, Bloomberg model will be very relevant.
Okay, thanks.
Thanks, John. Juan, can you close us out?
Sure. Thank you, Maya. Great pitch. Very interesting opportunity here. I guess I'm curious about 2 things. One, I do want to follow up on Sophie's question earlier, make sure that I understand the data that you're obtaining from Moody's and S&P. That data is available to their other partners, correct?
That is available. That's correct. Yes.
Okay. I want to make sure that I understood that. Okay. So the other question I had then was, what is your go-to-market strategy? How are you actually getting in front of all of the different, tens of thousands of asset managers, pension plans, and insurance funds out there?
So we are an early stage startup as of now, and we are working with the consultants. And instead of cold calling doesn't work in this market, you have to know the people who you are talking to, senior CIOs or head of investments. So we are working with the people who have been in the industry for 20 years, 30 years, who knows the right people in the right places. And we are working on the commission basis. This is to expand the market. And later, we are planning to raise the second round of our funding that will allow us to increase our sales team. And that will allow us to reach across the, to widen our sales outreach. So that is one of the key things. In the so far in our run, we have seen the demands coming across the globe. We have clients from US, MassMutual from US. We have clients in the Asian market, in the UK market, in the European market, across multiple industries. So it's a very wide demand we see. It's just that to have the resources to cater all those requests.
Yeah, it's not surprising, Meg. I think a lot of the innovation we've seen in the investing world has been on the equity side, and as you mentioned, the bond fixed income side is a much larger opportunity in and of itself. So great job. Thanks so much. No further questions.
Thank you so much, Ivan. Thank you.
Thank you to our judges, and thank you, Mayank. And really quickly before we move on, I want to give the audience a quick reminder. Please rate each company at the bottom of your screen. That'll enter you for your chance to win a free Passport membership, and it will help us decide our Audience Choice Award and who is going to walk away with that $500 prize. So go ahead to the bottom of your screen, click on each company name after they present, and you can rate all 8 companies there. And then the scores will be tallied at the end, and we will be announcing the winner tonight. So up next, we have Chandu, co-founder and CEO of EnrichVideo. Please join me in welcoming him to our virtual stage.
We are all finance professionals out here, but for a common investor, finance is complex and kind of boring. We talk about structured product, alternate investment firms, RITs, and whatnot. This is the problem for investors. The problems banks and financial institutions are facing is it is difficult to explain this product without an in-person meeting. And with this pandemic, even those meetings are not happening. Banks are sending PDFs, Excels, they are not being opened. Everybody's tired of Zoom and Teams calls. You can't do it over it. We thought short form videos are super engaging. Why not short form videos for finance? So we take all this complex data and on the fly create videos and send it out to thousands of these banks, investors, and clients. It is like a friend is talking to you and telling you, hey, this is how your portfolio is doing. And by the way, look at this product. So since probably this kind of thing might be new, I thought we'll do a quick product demo before we jump into any more details.
Welcome to your portfolio statement from Neobank for the month of September 2021.
Is the audio?
Your portfolio value is 5,200,000 Singapore dollars. Looking at your net investment and total dividends received, your portfolio rate of return since inception works out to 9.3%. This is how your asset allocation looks across different categories. Keeping in line with your increased assets, we recommend a $4 million additional insurance cover for you. As a valued Neobank client, you will save 7,170 Singapore dollars on your first year premium. Thanks for watching the video. Click the buttons on the screen to know more about our life protection solutions.
You might be wondering, does this really work? We have worked with mass affluent to all the way till private banking kind of clients. And guess what? At least 25% or more have been responding every time. This is happening over a year, and the opportunity has been wonderful. We have signed up India's largest wealth management firm. Then we went on to sign Bank of Singapore, DBS Bank in Singapore, ACV just for one region and one use case for upselling through statements has been 200,000 and more. We are category creators. The pandemic has been a super tailwind for us. We are looking at a big opportunity here. This could be of interest to many people. How do we make money? The money is made on each of the videos, just 10 cents. but when you scale it up, it really adds up for us. And so we have been at around 250K USD with just a couple of banks. Quick about founding team. Myself and Poona, we have been founders of one of the super successful apps in India, now a unicorn, called Daily Hunt. It's a mobile news platform. We have the consumer-facing insights, how to design apps for consumers, and we are personally quite passionate about finance. We have some of the India's leading investors backing us. So here we are. I'm sorry about the goof up with the presentation. If you guys have any questions, I'll be happy to answer them.
Thanks so much, Chandu. Really great presentation. No worries about the technical glitches. It happens to everyone. And great product demo with all these types of content increasingly going to audio and video. I'm sure this is really exciting for your consumers. And Juan, congrats. It looks like your portfolio is doing well. So Juan, would you like to kick us off, speaking of?
Sure, Chandu, thank you so much for the presentation, and thanks for that demo. That was very interesting and highly enlightening. I guess I'm curious about two things. One, on the business model, I want to make sure I understand. So it's both a subscription plus you're also getting paid on each video that's served up to the customers as well?
Subscription is quite low. They just pay $15,000 a year, dollars a quarter.
Okay.
The money is made in those 10 cents a video. The more they generate, the more marketing campaigns, the more products they want to sell, they pay us more.
Perfect. Okay, makes sense. And then last thing, how customizable and configurable are the contents of the video itself?
Yes. So for the complex use case like video statement, we need to integrate the data and stuff with them. So it's typically on-premise for these large banks. And that we have kind of containerized. It happens in 2 days. Once it is installed, if they want to launch a new campaign, that's super easy. All they need to do is upload a new video, beginning personalization, your name will appear at the end. They can configure the question that they want to ask at the end of it, and it's super easy. And they get 25% per people responding to us.
Awesome. Thank you so much.
Thank you.
Thanks, Juan. Sophie, would you like to throw some questions over at Chandu?
So many questions, because I'm actually from a video production background about a decade ago, but this is very interesting. I feel it can serve for both next generation as well as my parents' generation, because there's no way they would figure out exactly, doesn't matter how visualized it is, right? Interactive video is still very, we're visualized animals. So my question goes to, where do you see the hyper growth for monetization coming from? Is it for converting customer to private wealth managers or through the customer themselves, subscription? Where do you see,
we did try the B2C model. In US, we were doing online videos for stocks. At the end of the day, we would generate quick video depending on the price moment with the technical analysis and stuff like that. B2C market became too competitive, and the interesting part was the companies are much more willing to pay for that each video, 10 cents, whereas collecting that kind of money from end user is very difficult.
Got it. So B2B2C, I see.
Yeah, so we are B2C. So the banks and wealth management firms, they are happy to pay because they are making money using this.
Can I follow up with one more question? How do you come up with this idea? And then by injection, in coordination with the previous question is, what are other things that is missing between clients and wealth managers, aside from interactive video? Because that can be seen as a gap of communication, right?
Yes. A lot more, to be honest. I mean, one, at least in the region we come from, the transparency part is missing, which comes in with the video. Typically, insurance policies are missold. They don't get it clearly. It's a 40-page PDF document, which the client does not read. And later they come back to the insurance company saying, hey, what did you sell me? I have to pay every year. I thought I have to pay only once. And those kinds of things. Both banks are happy and the end consumers are happy when they see a video. But Going forward, other things, they want online kind of a thing, whereas a video bot would be ideal. Someone talks to them live, but not a real person. I mean, that's something at 2 a.m. in the night, I have a question, can I get it quickly answered? Chatbots are not cutting it yet, is what my interaction with customers is telling.
Thank you.
Thank you, Sophie. John, would you like to wrap it up for us?
I had a somewhat similar question, but maybe a bit broader. Given your great talents and experience in finance, what made you think this particular need was the hot button to focus all your efforts on, as opposed to other areas of fintech and automation?
It's a bit personal, I would say. When I started investing, I realized it is complex. I mean, people say you need to create alpha by investing in low beta stocks. It does get complicated. I said, let's make it simple. Can we talk in the language that people understand? So we started with that vision, and we still continue to work with, whereas all our competitors are super focused on marketing videos and making them beautiful, we are focused on solving these problems of financial industry.
Okay. I incidentally observed that most good innovation comes from a personal itch, so I very much appreciate that.
Thank you.
Thanks so much, Chandu. And thank you to our judges. With that, it is my pleasure to welcome our next presenter, Angelica, CEO and founder of Lendonomy. Please join me in welcoming her to our virtual stage.
Hello. I'll get right to this and start from the most obvious thing. We live in a global world. According to the UN, roughly 3% of the world population either study or work abroad. However, there is a question: if our world is so global, why are our credit histories so local? Credit history is not a trivial thing. Without one, you cannot really easily rent an apartment, secure car insurance, and sometimes even get a job offer, because credit histories in our societies are a proxy of trust. We all know how credit histories are built. They're built by borrowing. Today, hundreds of billions of dollars, however, are being borrowed by people from each other every year through applications such as Venmo, and they happen outside of official credit systems, leaving people without credit history attached to the use of such applications. So we thought, what if we in the company bring millions of such unofficial transactions to light, assign people a trust score, save it on the blockchain, and give the world a globally verifiable proxy of trust? This is how we built Lendonomy, an educational credit history mobile app that we built on a blockchain ledger with a Tinder-like user experience, and we designed it specifically for young people. We put in more than 30,000 hours of dedicated development effort to make it work, and the tool is insanely complex on the inside, but basic and beautiful on the outside. As a user, you can choose whether you want to borrow or lend, and then it works just like in Tinder, where you can swipe right or left up until you get a perfect match and sign a legally binding loan agreement. We'll look at how people return money back to other users. We'll look at what other users say about other users, and also look at how our users consume educational materials, which we provide for them, on the assumption that more educated users will make better decisions. And of course, all of that is saved on the blockchain ledger, and you can download it in a beautiful blockchain backable credit report. We have created a safe and compliant environment for young people to gain experience with credit. Today, we're a Norwegian company. We're connected to 99% of Norwegian banks. 93 of our users repay their loans early, and we had only one defaulted loan on 1,000 loans that we had on the platform. We send up users from 68 different countries and integrated all needed KYC, AML, and third-party credit checks as well. We're tackling a market which is worth $85 billion, starting from Norway initially, but then moving to the EU, and the US is our target market and the ultimate goal. goal. We charge 1% from the loan amount from borrowers, but the most important thing is the data that we get, which is priceless, because we assume that people who will use our application are going to be young people for whom this is going to be the first ever lending experience. We have a strong team with both business and tech acumen. Myself, Forbes featured entrepreneur. We also have a designer from Nike, and our CTO has more than 20 years of experience building blockchain applications. Strong board. One of our board members even brought Klarna, which is a multi-billion fintech, to Norway. And we got also a lot of positive media attention toward us, who were called Airbnb for lending, Tinder for lending, and generally praised for our unique approach to democratizing the industry. Our investors also love us for the reasons that we walk the talk and for the use of our also modern tech in the application. As of now, we're raising 3 million to scale the product to Europe and increase our market size by 70 times, because Norway is a very small country. And we invite you to build a global economy with Lendonomy. Thank you so much.
Thank you so much, Angelica. Let's head over to our judges for questions. John, can you kick us off this round?
Yes, I wanted to understand, and I apologize if I missed this. You are just doing Venmo and equivalent transactions, is that correct?
In a way, it's a different kind of technology though. We're built on open bank and APIs, and we connect, we add all the required, legally required things on top of just the pure transactional experience. In other words, you get legally binding loan agreement, you get notifications on when your loan is about to expire, you get updated credit score if, for example, you are good with your loans or if you're bad with your loans. So, but you can simplify it in a way and say that we're like Venmo for loans.
But what I was asking is, overall, a lot of young people would also have traditional credit or loans. So is this combining them, or does the bank take you and the traditional credit score and put them together?
Well, that's a rather tough question, because no worries. It's also pretty late, so almost 1 a.m. In the place where I am. We use the banking architecture. We use open banking APIs, so we're not a competitor to banks in any way. And we definitely understand that our users will also use other credit tools such as credit cards, and we consider credit cards to be a partner to us. What we want to do is that we want young people to come prepared when they start using their credit cards, because the problem is that when you get your first credit card, you don't really know how to use it, and then you end up in a loop of debt. In Lendonomy, we cap your first transactions, and then depending on your trust score, you get to borrow more or also lend more. So you learn both responsible borrowing and responsible investing at the same time. So it's a bit of a different product, but we are kind of competing with credit cards, but we look at them as the natural development for our users. So first, to start, it's something very simple, because P2P lending is the simplest form of lending. And then when you're ready for a standard credit card, we will recommend a credit card. And maybe
I was actually thinking you were just competing with credit scoring, but you are actually also being the credit platform for the young people.
We are a loan intermediary, to make it simple. So we are bridging borrowers and lenders in a Tinder-like experience.
Okay. Yeah. Okay.
So
all right.
You can.
All right. I'll let the others go. Thanks very much for helping me. Thanks.
Sophie, I see you're unmuted. Do you want to jump in with a question?
It's all your KYC, AML, and say potential loss, fraud collaterals are outsourced, or you handle internally?
They are outsourced. We use specific providers who have a legit reputation to do that, and we focus on what we do the best. So in Norway, there is a specific thing called bank ID, and then it cannot be compromised because it belongs to a central party, to the government, pretty much. And then the only way to get it is to actually get it outsourced from those parties who have access to the bank ID. So we, legally speaking, do not have any other way of doing it rather than outsourcing it to other providers, but we integrate with it, and the overall user experience for the for the user inside the application is smooth. So the user doesn't notice these things. We're not a credit scoring agency, so definitely the very first time the user joins the platform, we'll need to use a third party to check whether the user has any payment remarks to actually use the platform. We're not an AML agency, so yes, we will use an external AML agency that will go through all these Dow Jones lists to see if the user has been politically exposed. So yeah, I hope I answered your question.
Got it. Thank you.
Thanks, Sophie. Juan, I think we have time for one quick question.
Sure, Angelica, thank you so much for staying up late to pitch to us. Very interesting company. I'm curious, what's typically the average loan size that you're seeing on the platform, and what is the loan term and interest rate? Are those things more standard, the interest rate and loan term?
We are talking about small loans here. So the average amount is $50. The loans span from $25 up to $1,000, and all users join with a fixed trust score that allows them only to borrow up to $100 at a time. Users can borrow also from several lenders, and one lender can lend money to several borrowers. We have a map of transactions, and we cap both lenders and borrowers because we assume that our users are going to be young people who need to learn how to use the service first.
Thank you, judges. And of course, thank you, Angelica, for joining us. Great presentation. Congrats on the progress. And extra thank you for joining us so late at night, or I guess early in the morning.
Thank you so much.
All right, everyone. Up next, please join me in welcoming Javier, CEO and co-founder of Wipei, to the virtual stage.
For cross-border purchases in Latin America. Cross-border e-commerce has opened doors for developing regions like Latin America to access first-class products and services at affordable prices from some of the best companies in the US and in the world. Latin Americans can now access international websites like Amazon and AliExpress and buy products that they couldn't even get in their home countries, or even use services and platforms like Airbnb and Booking to book their vacations. 50 million Latin Americans will make a cross-border purchase in 2021. There's been a lot of progress made in cross-border logistics, but that progress has not been matched in the financial solutions segment. In fact, cross-border purchases in emerging economies have no appropriate financing solution for a market that considers installments totally essential. People like Jose and Andrea, millennials from Buenos Aires, that could not book an Airbnb for their honeymoon in Miami because their limit on their credit cards was not big enough to make that purchase up front. And they're not alone in this challenge. In fact, if they had the possibility, 79% of millennials in Latin America would prefer to pay in installments on a purchase over $50. Cross-border transactions for 2021 will top a $32 billion value, and we are seeing an average growth rate for 2023 of 75%. That's twice the rate of domestic e-commerce. That's why we are building the first buy now, pay later platform for cross-border purchases in Latin America. And how does it work? Well, a user will choose a product or service, and our platform will instantly issue a virtual gift card or prepaid debit card with the funds to make that transaction. And they will be able to split that purchase in 2 or 3 interest-free installments monthly, being paid monthly. Wipei will then collect those monthly installments from their credit or debit cards. Our revenue comes from charging a small transaction fee on the first installment to our consumers, and also from the interchange fees we get from the prepaid debit cards and the commissions from the virtual cards. We started working on on our MVP in June, and we are currently testing it on real users who reported in 90% of the times that they would choose our product over the financing traditional solution of credit cards for tickets over $250. Regarding partnerships, we have partnered with 2 logistics companies which are bringing products from the US and China to Latin America to get Wipei in the hands of any Latin American that needs to make an international purchase. Our team has the experience and balance needed to tackle consumer lending models, tech product development, and cross-border solutions with vast experience. I'm an engineer with a passion for finance, and next to my brother Juan, we have worked on building consumer lending products for the last 10 years, having spent 2 of them in a buy now, pay later startup domestically. Ezequiel, our VP of product, has more than 10 years working with startups in product development and growth. And finally, Martin Lopez, our tech advisor, is the co-founder and former CTO of one of the biggest online marketplaces for cross-border purchases in Latin America called Tienda Mía. If you want to learn more about Wipei or have any questions, please feel free to reach out. Thank you very much. Let me see if I get this correct now.
Thanks so much, Javier. Great presentation. Let's head over to our judges for questions. Sophie, would you like to kick us off? I think we lost Sophie's audio. So Juan, can you jump in and go first?
Thanks, Javier. You definitely seem to have found a pretty interesting opportunity in the markets. I'm curious, how do you expect to reach all these potential customers, either at the point of when they're actually making these purchase decisions or immediately after? How do you plan to reach those customers?
That's an interesting question, because as traditional buy now, pay later models, you actually appear on checkout. We do not appear on checkout because we were talking to super big merchants. What we do is, as I said, we generate these virtual cards. So regarding distribution, we are looking to partner with different logistics companies and keep going through that model so that we can actually leverage their user base and get communications to their end consumers so that they can know that the solution is out there and start through that way.
Got it. Okay. Okay. Understood. Okay. Thank you.
Thank you.
Thanks, Juan. John, would you like to jump in with a question for Javier?
Yes, I want to go. The couple you mentioned in Buenos Aires couldn't book the Airbnb because you said they had a limit on their credit card, yes?
That's correct.
Now, I'm willing to believe that banks are not very creative, but in principle, there's a reason they have a limit on that credit, which is somehow the bank doesn't think they deserve more. You are giving them more. What is your play that you can have more confidence in them than the bank, basically, is the question.
That's an excellent question. And that's the main issue that we have in Latin America. There's not enough credit for the consumer base. So for example, what happens is that a bank will maybe give you a credit card for $200. And $200 for somebody that maybe earns $1,000 per month is actually not so good credit. And that's where I've been working in the last 10 years, is to actually fill that gap in consumer lending that banks haven't gotten to fill it yet. And we are seeing startups in consumer lending doing that. So we believe we have pretty good underwriting, 10 years of experience doing that. And we know that we can get pretty good results out of that to extend that extra line of credit.
But just for a second, do the banks just not have the credit, or do they have a different risk profile than you do?
That's correct. They have a different risk profile, and they don't tend to see the variables that we see when we do our underwriting. It's kind of we tend to serve people that are not so well served by the bank because maybe they're looking for other type of clients.
Well, but okay, so you're looking at other metrics, and that's a long answer, but you're looking at other metrics. So you have other hooks to assure yourself that you're not getting into trouble that are, for whatever reason, not available or not used by the traditional banks. Is that what you're saying?
Yes, that's what I'm saying. And we have data over the last 10 years that actually has been worked around and has actually proven to be sufficient so that we can generate good models. We continually learn about it and iterate it, because the main objective here is to get the best data possible, and the only way you're going to get that is through track records of each people. So data is probably the key.
Okay, thanks.
Thanks, John. Sophie, I think we have time for one quick question.
Yeah, so why cross-border, since your competitive advantage is the data and you're banking the unbankables in certain areas? That's one. Second is, describe a perfect ideal customer profile.
Fantastic. Cross-border, the first question is because the buy now, pay later companies that are appearing in Latin America are super focused on each country. And we live that. We are startup entrepreneurs of a buy now, pay later company in Argentina. And when we wanted to internationalize the startup, we actually couldn't do it because it takes a lot of resources to move from one country to another in Latin America. People tend to look at Latin America as a whole, but it's super hard to offer a product that can actually be used in the whole continent. But with cross-border, we can actually do that. We can actually serve all the population of Latin America as a whole, and not go country by country as the rest of the buy now, pay laters are doing. And to be precise on who would be an ideal customer, it would be a millennial that has purchasing power, that actually does have a credit card, but needs the appropriate financing tools for the payments that they need. If they want to travel, get the possibility to actually finance that. And to be clear, banks in Latin America, they do not finance operations. They do not finance cross-border operations. They do finance domestic operations, but not cross-border. So that's why we also want to do it. We want to give the possibility to offer installments to the millennial base that have already some track record and have sufficient income to prove that.
Thank you.
Thank you.
Thanks so much, judges. And thank you, Javier. Great presentation, and look forward to seeing what you do next.
Thank you.
All right, up next, everyone, we have Yael, co-founder and co-CEO of SolidBlock. Please join me in welcoming her to our virtual stage.
Hi, good afternoon, everyone. Thank you, Tara. Thank you, judges. And without further ado, I'd love to invite you into the world of real estate, which is a huge market, $300 trillion worth of property. Yet only 1% of that today is tradable, which is mainly public REITs. Our mission is make real estate work for everyone. Today, when investing in real estate, most investors are faced with the following three problems. Number one, you need a lot of money to start investing. Number two, you cannot access good deals. And number three, and most importantly, your money is locked for 5 to 7 years in one deal. That's why SolidBlock was created to enable investors to buy and sell any asset at any time, anywhere, just like NASDAQ for real estate. We transform property into tradable financial product, connecting asset owners with investors and traders with our token origination or token minting platform and our partners, which has trading platforms, exchanges, investment networks, and the like. Our vision is to become a financial services platform for tokenized real estate. Imagine the bank of a future where you can deposit your property as a property owner and get access to a variety of financial services, not unlike the ones you're getting today from a traditional bank. You can get a loan, whether from peer-to-peer or institutions or organizations. You can get credit, you can get payments, you can get all kinds of financial services once you have this digitized financial product, which is backed by a real world product, such as real estate. So our plan for this year is to continue penetrating the market. After successful use case, we were actually one of the first companies in this market and the first to tokenize successfully a commercial real estate project for the St. Regis Aspen ski resort called the Aspen Coin. Next year, we're going to work on connecting our platform to loans. We already have several partnerships, including one with MakerDAO, one of the leading stable coins in the blockchain crypto space. Continuing into financial products such as derivatives, indices, and benchmarks, and other financial services. We have a great list of successful companies as competitors, such as Securitize, Vertalo, Polymath. In our space, we are actually one of the only platforms that has connected to almost every single secondary marketplace. That's one of our strengths. So we're planning on providing a global liquidity pool. So we are the step for any property owner to have a liquid offering. We're focused right now on several really interesting real estate projects, including medical portfolio in Florida, a resort, a first sustainable resort in Panama. Myself, I come from a financial background, such as Wall Street, M&A, private equity, and the like. My co-founder, Yuval, has an IT background, complementing me there. Our team spans Israel, United States, and Europe. And we have great advisory board members, such as the former CEO of Tel Aviv Stock Exchange. I mentioned a list of our partners globally. I'm happy to answer any questions. Thank you very much.
Thank you so much, Yael. Let's head over to our judges. Juan, can you kick us off?
Sure. Thanks for the pitch, Yael. I'm curious, who's the target customer, target user here? Is it the sort of the corporate real estate owner who's looking to monetize their property or securitize their property for additional access to capital, or is it the the consumer homeowner looking to securitize and or get additional finance capacity for their home?
Yeah, that's a great question, Juan. And we do have several competitors that are focused on single family homes. We're focused on larger commercial projects. And the reason is liquidity. We believe that larger projects will have a better access to liquidity. And also single family homes right now are pretty much accessible or more accessible to individual buyers and investors. And commercial projects need to, number one, diversify their investor base, and number two, regular investors have very little access to those projects. So that's where we're examining our product market fit at the moment.
And just a follow up, what's the any regulatory hurdles for you? Is this considered a security?
Absolutely, it is a security. We're using a Reg D 506C security regulation that allows us to market to anyone but accept funding from accredited investors. One important differentiation, actually, I should mention, between us and our competitors is we're using an investment banking model, meaning that we have our own segregated portfolio company in Delaware. So every time we open a new project, we open a new series. And so we actually partner with every single real estate sponsor on a co-GP level. We're co-GP with that sponsor. So essentially, we're creating basically almost like a box in which we're adding a new real estate product that we're marketing. As a sponsor, we're allowed to market in most states of the United States, except 5, including Texas and Florida, where we are marketing through broker-dealers, licensed broker-dealers.
Thank you.
Thank you.
Thanks, Juan. Sophie, over to you. Any questions?
I do. I invested in your competitor, but I'm still very curious about your business model that a long time ago. So can you walk me through the co-GP model a little bit?
Yeah, absolutely. So imagine basically SolidBlock as a real estate company that runs on the blockchain that basically takes products, right, that are real estate, converts them into a financial product, For every single financial product, we're opening a series of our LLC. We have a SolidBlock Holdings LLC in Delaware. So as real estate sponsor comes to us and says, I have a hotel in New York and I want to tokenize, let's say $20 million, 20% of my equity. So next step is we're creating a new series, which has an agreement with that hotel to buy 20% of their equity, right? So then the fundraising starts as soon as we have, number one, a PPM, number two, that LLC, number three, the agreements to buy, and number four, Reg D registration, right? There's a few other things that we're doing, like a smart contract, QSIP numbers, things like that, right? So once we have the initial package, we're ready to start, marketing and sending information to investors, which normally our sponsors actually do the majority of fundraising today. Once the money is raised, the LLC agreements come into an effect, and effectively that new company now has 20% equity in that hotel, right? Now, investors have all the traditional rights. On top of those rights, SolidBlock at any point, because of non-performance of that asset, has a right to administrate that asset and to eventually for some products, even to switch the sponsor, right? If we have several products like that buy and sell single family real estate, we can switch out the sponsor and continue working on the product. So we're essentially right now governing this as a company that has a variety of products inside.
So a project does not need to tokenize 100% of equity. So it's a sliding scale in terms of the portion of the equity. And then you providing the token economy by providing a better liquidity event for the LPGP. Okay, got it. Thank you.
So it's mainly a feeder fund. Usually it is a feeder, it's some sort of a feeder, right? And the reason why is, number one, there's usually a mortgage on the property, so we can't tokenize 100%. And number two, because a lot of the investors, like institutionals, are still coming in through a regular vehicle. They are not ready to come in through our vehicle. I hope that this is going to change. And in the future, we're able to actually tokenize the whole portion, the whole asset. Yeah.
So you're doing Reg D now. Will you consider Reg CF, Reg S, all that?
We do. We have Reg CF for some projects. They're limited to $5 million. We partner with Republic and with several other crowdfunding sites. Actually, what's more interesting is Reg A plus, right? So that's our next step.
Got it. We'll follow up. Thank you.
Sure. Thanks.
Thanks, Sophie. John, I think we have time for one quick question.
Hi. Yes, I guess I would ask, to some extent, real estate almost seems to have too much liquidity sometimes. And I'm wondering if you see any risk in opening it up to an even broader, more sort of instantly tradable market.
It's a great question, John, because I hear it a lot. Because
particularly this month.
Yeah, investors are, I don't know if there is too much liquidity on the market because the numbers show the opposite, but too much maybe for investors who are kind of, want real estate to remain as stable as it can. So I wrote an article on that in PropMoto maybe a year ago that basically looked at the data of public REITs, which is the equivalent of the most liquid real estate at the moment. And it showed that even through the most drastic events, the increases or decreases never in the share value never went above or below 30%. So that was as high as it could go. If you compare that to any stock, if a stock market, any sort of a specific product, it's definitely nowhere near as volatile as most shares, right? Specifically look at the market today. So the answer to that is the underlying product is still fairly stable. Things happen in the markets, that cause prices to shift. It is true that tokenization, if applied widely, will probably exacerbate value decreases during certain events, like natural disasters, like market bubbles, or let's say Corona happened, the office, obviously, the office market shares will definitely drop. However, on the average, I believe that it's going to make the market much more accessible to investors and create the much more efficient market where people will still be able to create more stable value, a basis of your wealth portfolio that everybody should have, right? Everybody should have a piece of real estate in their portfolio. And most people, especially in the US, are starting with stocks because that's what they have access to as retail investors. Thank you.
Thank you so much, judges. And thank you, Yael, for the great presentation and for all of your thoughtful responses.
Sure. Have a great day. Thanks.
You too. You too. Up next, please join me in welcoming Stefania, founder and CEO of Physis Investment, to our virtual stage.
86% of investors today want to know the real impact their investment is making. The SEC is forcing clarity on sustainable disclosure, and the European Union has already moved sustainable reporting from fashion to must-have. It's a huge market movement. In the last 5 years, over 260% was the growth of sustainable assets, reaching 17 trillion. And now, impending regulation will affect the whole industry. Every single player on this slide will be affected from sustainability, going from fashion to must-have. What are they going to do? One-click journey with Physis. Physis is the most comprehensive, sustainable data platform. All they have to do with one click is to upload their already existing portfolio on the Physis platform or type any security identifier. They will get a detailed sustainable analysis on any security. One click to track the water recycle since the day of the first investment. One click to monitor emission of portfolio companies. One click to see the amount of green energy produced by solar or wind. But wait, there is more. We cover over 1,500 sustainable data points for 24,000 mutual funds, 10,000 companies, and 850 ETFs. Our users are happy investors because with one click, they gain more clients who care about sustainability. With one click, they build sustainable portfolios, and one click, they comply with new regulation. We already help transaction over 95 billion to sustainable portfolios. And we are active in the US and in Europe. We serve large asset managers, small and medium-sized RIAs, and pension funds. It's becoming a bit crowded because it's a big market opportunity. But while all our competitors only focus on one aspect of sustainable investing, that it's called ESG score, we tell you a story that no one has ever told you before. And it is the real impact your money is making since you started investing. I am a quant humanist. I was one of the first impact investing fund manager, growing my fund from 60 million to over 100 million, reaching 6,000 investors. I'm a university lecturer, a board member, and I wrote 2 books on sustainable finance. Louise is our head of development. She has over 10 years of experience in project managing, and she's a full stack developer. Physis is a team of 16, and together we developed a product from an MVP to launch, and we launched in May this year. And before we beta test with over 200 users. We are fast acquiring new clients, and our revenue model is simple. User pay us a subscription. This year, we are going to close cash flow positive. But most importantly, we benefit from a huge economy of scale. And next year, we will present massive profits. We are ready to scale. We make clients happy. We are thrilled that the SEC is moving sustainable reporting from fashion to must-have. And we are looking for the next round of funding to support our rapid growth. Do not miss the opportunity to lead sustainable investment innovation. One click with Physis. I'm open to questions.
Thank you so much, Stefania. And thank you for the quick tech fix.
Yes, I'm so
Glad we
sorry.
were
I don't know
able-
what happened.
All
It
good.
was
It
working
happens.
before. I didn't touch the computer in the meantime, but
No worries at all. Let's head over to the judges. John, would you like to kick us off?
Yeah, so it looks like the example you gave there, I think, of recycling something, and it had Coca-Cola had 20 million and CDW and then Pepsi, and then you had the total for the industry. Those you're taking from their CSR reports, is that correct?
yes, that was the total of an ETF that is tracking the Russell 1000. You can really input any security. It can be a single security or a portfolio. And we have to know when you started investing in that portfolio, and we are able to tell you how much water they recycle or how many jobs they have created.
But I'm saying that the amount they recycle is their
yes, we
reporting.
take it from CSR reports.
From there. Is maybe picky, but I'm wondering if there's any issue, I know others have raised this, of auditing that, because what Coke thinks they're recycling is not the same that either CDW or Pepsi thinks they're recycling, kind of.
It is. I love
issue.
this question. I love this question. You know why? Because it's allowed me to tell you what we do. We have in-house research, and we combine our in-house research that it's quality check with external data sources. We combine over 15 different data sources. And what my analysts do is a lot of quality research, because what you mentioned, it's key. Sometimes their data are reported not even by year, but like, for example, for 5 years, or the methodology that they report between Coca-Cola and Pepsi might be different. So we work with by aggregating these data and do quality check on every single data point.
Are there any standards for, I don't know, almost like ISO standards for what a recycling is or what a sustainable material is?
Yes, there are some ISO standards, just like there are some best practices in the industry. The main problem right now that we're facing, big corporations have improved their quality and the disclosure immensely in the last few years, but we're still facing a little bit of troubles when it comes to actually getting data for small and medium cap.
Okay, all right, thank you.
Sophie, would you like to jump in?
I have a loaded question though. Okay, so Clarity AI is getting in a lot of trouble right now because what they promised to BlackRock is not there. So I'm just really curious about, like, core question is, having more financial data is not, it doesn't improve the ESG matrix, right? Every company is a little different. Financial data is not robust enough as a proxy. So I'm just wondering, how do you, unless you have, like, where are your data sources? And especially to get the S right.
So let me see if I fully understood the question. The first thing is, we are a sustainable data provider first, but we are also the only sustainable data providers that also incorporate financial data. And indeed, we have a redistribution agreement with Refinitiv and Morningstar. Why? I am a fund manager, and sustainability is not something that stands alone. It's something that needs to be fully integrated in the investment decision process. So we want to be the one shop all. Second, we spent over 2 years developing and beta testing, not putting the product on the market. Why? We're going after clients that are used to have Bloomberg quality product. And I didn't want to go out there and do mistakes that other companies have made before we were ready.
Got it.
So now we have a fully functioning platform, and we're acquiring paying clients, but we developed for a couple of years.
Thanks, Sophie. Juan, would you like to close us out with a final question?
Thank you so much, Stefania. I just have one quick question, really. You mentioned that the business model was that of an annual subscription fee, assumed paid by the asset manager and our RIA clients. Is the expectation that they turn around and offer your solution to their customers and somehow you can recoup their costs through that better service in some way? Or Or are you also then going directly to investors as well?
Oh, you mean if we directly go retail?
Yes.
Okay. Not right now. The idea right now is to focus on B2B client acquisition. But since they have to face and discuss retail at, their final clients is retail, we have developed a solution on the Physis platform that with one click, they're sharing one of their clients' portfolio, and they're able to navigate the platform just for their portfolio, so that a client of an RIA can click on a link that RIA sent provided by Physis, and they can review how many sustainable shoes they have produced by investing in Nike. So the idea here, it's more than just ESG. The idea of Physis is that there is a narrative that no one has told you about what happens to your money once you start investing. 99% of portfolio narrative has been, since investing was born, on financial metrics. So why, if there is so much to know about what happens to your money once you start investing? And also, I think really this is the new level of fintech. We have been seeing a lot of fintech bringing accessibility to investment until now. Robinhood, for example. But no one has really lowered the gap between investing and the people. Like, people don't fully understand how to invest and what happens to their money. And that's what we do.
Thank you.
Thank you so much, judges. And of course, thank you again, Stefania.
Thank you. And sorry again for the mic.
Oh, all good. All right, everyone. Really quickly, before we jump into our final presentation, I just want to remind everyone that it is your last chance to vote for our audience winner, and your last chance to be entered into a free Passport membership. So check out the bottom of your screen, rate each company, and you'll be entered into that raffle. So last but certainly not least, please join me in welcoming Patrick, CEO and founder of Benefi, to the virtual stage.
Everybody, I'm Patrick Dunn, and this is Benefi. I want to tell you a little story about our friend here, Kavita. She's 24 years old. She's a newcomer to the country, and she's driving to work one day and has a car problem. It's a $3,000 transmission fix. What does somebody like Kavita do, who the banks would call a thin file or no file borrower? Her options aren't great. She's going to put her fix on her credit cards at 19 or 27% per annum interest. She's going to borrow and put it in a new fintech lender, such as Go Easy or Fairstone, which will charge you upwards of 48% per annum. Or the very fact that there are more payday lenders in North America than there are McDonald's means somebody is using these services. And here they top out at 380% per annum. None of these solutions are particularly conducive to a bright future for our friend like Kavita. And the fact is, there's an awful lot of people like Kavita. 30% of the population in North America is believed to be an ICG, an invisible credit group, like Kavita, with really poor borrowing options. And what's interesting is that companies care about this issue, because if you're financially well, you're spending a big chunk of your salary paying down your debt, it actually impacts the work that you do. You have higher absenteeism, lower productivity, you consume your other group benefits at a higher rate, and now we have an issue that impacts the bottom line and is estimated to be somewhere between 13 to 18% of all salary costs. And there are no great solutions for someone like Kavita. The fact is, if she borrows from one of those lenders, she's likely going to be on the debt treadmill for a long time, impacting her finances and her mental, physical, and financial health. We need a better way to lend to somebody like Kavita. And that's exactly what we do. Benefi provides financial stability as an employee group benefits, or a B2B2C, something that employers offer to their employees. And our core product is salary-backed lending. Our friend Kavita is able to take out an affordable loan through her employer, which is repaid via payroll. And doing things this way completely changes the risk model or risk paradigm compared to a traditional lender. Fact is, the addressable market for ICGs is massive. It's a $6 trillion business globally, of which 20% is located here in Canada. We reinvent the risk model for these groups and are able to hyper-serve the underserved. And we have both first mover and second mover advantages in this market, because we know something somewhat similar is working very well in other markets, including Brazil and the UK. We spent the past year developing our IP, which is a brand new way of looking at risk. Traditional FICO 8 scoring is not as relevant for our kind of lending. because what we really care about is what is the likelihood of the adverse event of you leaving your company to happen. And this is important because as long as you remain employed, repayment is guaranteed. And this allows us to offer incredibly competitive rates for someone like Kavita in the 7 to 14% range, a far better deal than she's likely to get anywhere else. And what's great about our product is that we're moving toward a two-sided marketplace. Our technology ultimately allows you to take a little piece of your salary and put it somewhere. And while lending is, and non-balance sheet lending is the core example of how that can be used, we can also talk about other products and services we offer down the road, including savings products in particular, and financial advice as an employee group benefit. Oops. We make our money primarily through the lending platform through loan origination interest fees, product referrals through our financial engagement platform, and subscriptions. Having dealt with quite a number of employers, we know that employers are actually interested in buying the rate down. And in that scenario, we actually offer a subscription fee per employee per month, which in that case, we actually forego our origination fee, making it a better deal for everyone. We are launching in 2 days with our first client. We're very excited to get out there. First client is a company of about 100 employees. We have several signed clients following soon afterward. The average company size is somewhere between 1,000 to 1,500 employees each. And we've got a good funnel of companies signing up and launching over the next couple of months. And what I think is also important to note is we have a signed relationship with a top 6 Canadian bank where we're actually leveraging their bank charter to lend off of their balance sheet. The team is made up of highly successful founders, repeat founders. Dr. Bassard, our CTO, is a doctorate in data science and computer science. Scott Jeffries was a financial advisor for many years. And we have all the bases covered in terms of industry expertise. And in my case, I worked at Canada Life, a major provider of employee group benefits here in Canada for many years before launching Benefi. That's Benefi. I'd appreciate any questions or comments you might have.
Thanks so much, Patrick. It was a great presentation. And thank you as well for being ready to just kind of jump in and jump the line earlier today. All right, let's head over to judges. Sophie, could you kick us off, please?
Can you walk us through how do you value the financial stability as an employee in Canada?
I'm sorry, I'm not sure I understand the question. How do I value financial stability as an employee in Canada?
Yeah, just on your platform. How do you do underwritings of each client? Yeah.
Right, great question. So the risk model which we're developing leverages non-traditional data, including publicly available employment data, LinkedIn, Glassdoor, and a few others. And that helps us understand what is the likelihood of an individual to leave their company. But because we didn't want to recall any remaining balance if somebody left the company, we also leverage traditional scoring for that last piece of the puzzle. If somebody actually leaves the company, what is the likelihood to get our money back? And what we're doing, we're very careful about doing as part of the platform is in some cases renegotiating with an applicant. So if somebody wants, 24-month loan and $8,000, and we know they're in a highly precarious industry with very low tenures, we actually counter propose and say, well, you can't have that. You can have $3,000 in 6 months to pay it off. And if that goes well, you can do it again. And the great thing about Benefi is that we actually improve credit scores. We establish a credit history and help someone establish a credit score.
Got it. Thank you.
Thanks, Sophie. John, would you like to jump in with a question for Patrick?
Yeah, you indicated that a disproportionate amount of the whatever was unserved credit happened to be in Canada, which is sort of curious. And so there's obviously a big addressable market there. Do you see Benefi potentially growing into other markets besides Canada?
Great question. Usually we say Canada is not the #1 starting point just because of our market size. But in this case, we've got a large, wealthy, yet highly indebted population, which actually makes Canada a really interesting place to start. We've identified a number of other markets where we know this would be a very interesting solution, either due to a company or a country's debt to income ratio or debt service ratio, or very poor lack of lenders. Japan in particular, we think is also really interesting because of their huge what is called a sarakin industry, which is a predatory payday lending scheme.
Okay.
Yep.
Thanks, John. Over to you, Juan.
Thanks. Thank you, Patrick, and good to see you again. I guess just one quick question. I guess I'm curious as to how you plan to actually go about signing up all these companies as part of their benefits packages for their employees.
Yeah, our go-to-market strategy looks to break the traditional group benefit sales cycle, which can be very long. We actually have two routes and a couple of channels to enable that. And the first is we know companies understand this idea that mental, physical, and financial health are linked. Group benefits providers have been talking about this for years. And there's, I think, a very direct link that we are the only ones which are solving the root cause of that problem for many people. And what's great about the Benefi platform is we offer the entire platform to an employer, in some cases at no cost. It doesn't cost the company anything to adopt the Benefi and offer it to their employees. And this is obviously part of our rapid adoption strategy. We want to get Benefi in front of as many companies as we possibly can. We do also offer that subscription offer as well, where if a company really wants to drive down the rate for their employees, they can pay a subscription. We forgo our origination and everyone's happy. But post-launch, we've already generated a number of great conversations with group benefits consultants. These are folks who have the ear of HR and employee benefits leadership within a given company. And we're going to leverage this channel to get our product into as many hands as quickly as possible.
Thanks so much. Thanks again, Patrick, for the great presentation.
Thanks, everybody.
And with that, we've heard from everyone. We've heard from each of our founders. Thank you again, all of you, so much for joining us. I think I speak for each of our members at OneValley and each of our judges when I say that we were all thoroughly impressed. And we are genuinely looking forward to seeing what the future holds for you all. Please stay tuned while we tally our judges' scores. We'll be right back. And in the meantime, enjoy a few words from our partners over at Figure. All right, everybody, we have our winners. I know that you are all waiting with bated breath, so without further ado, I'm going to start with tonight's audience participation prize. So the winner of tonight's audience participation prize, an annual passport membership, is going to go to Sherelle James, co-founder of My Local CFO. Congratulations, Sherelle. We're really excited to have you joining the passport community. Someone from our team will be reaching out to you in the next few days on next steps. And as a brief reminder to the audience, if you do not already have a passport account, please use the code FinTech25 for 25% off of your premium passport membership. There's a button at the bottom left of your screen that'll take you right there. Next up, I'm going to be announcing our audience choice winners as well as our grand prize winner. So I need all of our startups to please turn on their videos. Give you guys one quick moment. Awesome, great to see you all. All right, first up, I'm going to announce our audience choice. The audience votes are in, we've tallied all the votes. And the company that will be walking away today with a $500 cash prize, is Physis Investment. So congratulations, Stefania, and to the rest of the team. Stefania, is there anything that you would like to leave the audience with before we go?
Thank you. I'm super grateful. And yeah, I did not expect it, but I'm really glad. It means that we deliver a good pitch. And most importantly, be tuned. Follow Physis on LinkedIn to know all our coming events and new platform features. Thank you, guys. Awesome.
Congratulations again, Stefania. And without further ado, the grand prize winner of tonight's competition that will be walking away today with the $2,000 cash prize is IntelliBonds. So huge congratulations to Mayank and the rest of the team. I will actually be accepting the grand prize on behalf of IntelliBonds this evening. Thank you all again. Really excited that we were able to have you all here tonight, and congratulations on your wonderful presentations and for our winners. And so that concludes our evening. I want to take a moment to thank our amazing audience and to remind you that you can connect with any of the startups featured today via our Meet the Startups tab at the top of the page. On behalf of myself and OneValley, thank you so much for joining us, and thank you again to all of our founders. Our next pitch night is coming up on October 28th. We'll be focusing on education technology. So if you're a company in the edtech space, make sure to apply. Otherwise, please mark your calendars, and we hope to see you there. So take care, everyone.